Hello, welcome to episode 10. If you're interested in selling put options on Robinhood, HOOD, and backtesting, you're in the right place. If you're interested in using the Robinhood brokerage to sell puts, then you're in the wrong place, but feel free to watch anyway. I've been selling puts on Hood lately, on the dips. My rationale is because its balance sheet is so strong. It's selling for just over book value. Practically no debt, flush with cash, and it's starting to get its costs under control. Starting. It could be a buyout target for the bigger brokers, so I believe it has a margin of safety at this level. Share dilution and crypto exposure is a concern, so don't do this with your kids' tuition, at least not all of it. That's a joke. I'm not a financial advisor. This isn't financial advice. Do your own research before selling puts on Robinhood. So the chart behind me shows Robinhood since its IPO in July of 2021. So it's not done well. But since around January or March, it has leveled out, and put sellers have probably done pretty well through this period because the implied volatility has remained pretty high. And we haven't had any big giant falls since then. So over here on the right side of the screen is Robinhood's Financials tab on Yahoo Finance. Here's the last few years. You can see last year was pretty terrible. They lost almost $4 billion. But if you zoom in on the quarterly numbers, their losses are trending in the right direction. They only lost $175 million last quarter only. And the revenue looks like it's starting to trend back in the right direction. So now we're on the Yahoo Finance Statistics tab. And you can see their enterprise value is almost $5 billion less than their market cap. So that means they've got almost $5 billion in cash just sitting around with practically no debt. Their price to sales is a little high, but not outrageous, at about 6. And here's their price to book. If you scroll down to the balance sheet part, they've got over $9 billion in cash and only $1.6 billion in debt. So you'd think this would be a pretty good position to be in as interest rates continue to rise. As long as there's no funny business going on, no deception or fraud. So I'll be watching Robinhood's financials the next few quarters. If they don't continue to cut costs and approach break even with their earnings, that would definitely change my thesis for the worse. I'm going to backtest selling Hood puts now over this period and break it down by implied volatility. So this is the backtest aggregation chart for put sellers on Robinhood. Soak in this chart, pause the video, and just stare at it a minute. See if you can make sense of it. Okay, staring time is over. This chart has very little ambiguity. It's clearly showing a strong relationship between implied volatility and profit loss. Its biggest message: relatively low IV puts did horrible. That's these guys over here, for put sellers. Not real surprising after seeing its stock chart and the giant ski slope downward at the start. So each pair of these blue and green bars is the results of a backtest having about 1,000 legs in a certain range of IV, implied volatility. From left to right, the IV along the bottom increases. This is from the Hood IPO in July 2020 through August of 2022. Let's go take a quick look at the individual backtests. So we're going to show a slideshow of each of the 10 backtests, and here's the first. You can see its IV was 0 to 0.6667, and that it did badly. Here's the second one. It also did badly, from 0.6667 to 0.7499. So these are low IVs relatively for Robinhood. The third one is bad. Fourth one is bad, maybe less bad than the others. And now here's the fifth one at 0.9 to 0.94499. It actually showed a small profit. And notice they all have about 1,000 legs. So here's the next one, also showed a small profit. This one a small loss. We're all the way up to IV of 1 to 1.05. And then these big IVs start showing some profit. Pretty neat, huh? So things to notice from this slideshow. Selling puts with low relative IV below 0.9 did lousy, especially right after the short-lived IPO pop was over. Below 0.83 did really terrible. That's where most of the losses occurred. 0.9 to 1.05 were about break even, and above 1.05 IV was kind of nice to option sellers. So does this mean sell Robinhood puts with higher IV? It worked during this time frame. The bigger message was to not sell Hood puts with the lowest relative IV. They got killed. Maybe it means wait until Robinhood makes a big move down, IV spikes, and then think about selling puts. But here's a big problem. How do you know when you're in a period of Hood's highest IV? You don't. Not until many months afterward. You just have to consider your risk tolerance and use your best judgment. Let me know what you think of this episode. I tried to trim out a lot of the useless chatter and get right to the good stuff. I may go deeper on Hood and do more backtests, breaking it down further by IV, delta, days to expiration, some combination of them or other stuff. I'm not a financial advisor. This isn't financial advice. It's just a look at the data with some random thoughts bouncing around in my head. Up next, more backtesting of interesting stocks broken down by IV and other things. Thanks for watching until the end, and please like and subscribe.